the Confederation of Indian Industry. Joining me is the panel that spoke with us this morning. But let me start with a veteran of several budgets or several decades of budgets, Mr. Bajaj. A lot of people are already commenting and saying that this is as close to a dream budget as we could possibly get. In your assessment, how well has Arun Jaitley done?
We couldn't have done better in the circumstances. I think he's done a great job. Frankly, I shouldn't say this, but I'm pleasantly surprised. Somebody can ask me, why am I surprised?
I'll ask you, why are you surprised?
No, really I'm not. But that's the way I could express my happiness. My one single concern is very unusual here. There are a lot of people, and especially almost everyone in the opposition, will say this is pro-rich, pro-corporate, pro-this, pro-that, wealth tax hata diya, ye kar diya, corporate tax we have reduced from 30 over a 4-year period starting next year to 25%, etc. And those who want to criticize for the sake of criticize, I'm happy they are in the opposition.
Yeah, the politics is separate, but in terms of what they've been able to do to restart the investment cycle, to get the economy back on track, do you believe that it's done enough?
But let's face it, Shereen, ease of doing business requires infrastructure. Requires lots of small regulation changing. A budget can't do that.
No, sure, but he's even on the ease of doing business. I'll talk about some of the provisions that he's talked about. But Rajiv Memani, let me ask you, as far as taxes are concerned, along the lines that we had discussed, the DTC in its current avatar stands to be buried. GAR has been deferred or pushed back by 2 years. GST reiterating an April 1, 2016 timeline. Some of the inverted duty structures that we talked about have been corrected. But make sense of this corporate tax reduction over the next 4 years. We're still waiting the fine print of the document, but what is your understanding? Because this does mean that some exemptions will start to move away as well.
Yeah, I think what, I think where the finance minister is at is the effective collection is much lower than what the tax rate is. And therefore, if you look at what is happening globally, Shereen, right now is corporate taxes are going down and personal taxes at the higher income level brackets are going up, and at the lower income they are providing more incentives. That's exactly what he's doing. He couldn't have done it this year. Also, surprisingly, the demand from the industry, this is something that was not a demand of the industry. This is what the government has done. And they're trying to match to what is a competitive tax rate. They can't do it now, but they're doing it over a period of 4 years. And hopefully, whilst they can't deal with the administrative issues of the tax department, lower tax rates generally help in reduction of tax litigation, because the incentive of doing these high-pitched cases reduces.
And that was the rationale that he presented. Big positive for corporate India. Every time we talk to corporates, they talk about simplification of the tax regime. In that sense, even though, as they've pointed out, and I spoke to you this morning about the end of the exemption, Raj, as the chief economic advisor called it, does this then pave the way for a simpler, more predictable tax regime with the eventual rate coming down to 25%?
Absolutely. I think
so
the direction
about
is very clear.
going away?
No, I think it's much better for 2 reasons. One is the more exemptions you have, the more complexity of the law you have, the more complicated it is to fill up the tax return. And then you're quibbling and fighting what is right, what is wrong, what's there, what's not there. And secondly, having a 34% tax rate, what you were talking in the morning, including the cess, or from 30 now to 25, actually the figure outside for an investor also looks more rational and more inviting. When the actual is 22, 23, with exemptions, one will bring it down to the actual level and remove exemption to simplify. I think everyone wants a simpler tax regime on the corporate side and on the people side. I think on both.
Some of the recommendations specifically that CII had made, and we talked about it this morning as well, Rajiv, REITs and investment trusts, he has been able to rationalize the concerns that investors had. And gold being used as the underlying asset and investment schemes around that.
Absolutely. I think it's good to hear the sort of, I didn't realize the figures of estimated 20,000 tons of gold which is lying around with people's homes, but making that into bonds to give them a productive use of value, either as physical gold or as gold certificate. I think both these will actually bring money into the market, and he wants to give incentives for people to take these on, because the focus on infrastructure and economic growth. So I think it's moving in the right direction, absolutely,
Okay.
to get the economy moving faster.
Mr. Bajaj, talking about infrastructure, he's said that they will spend about 70,000 crore rupees between railways, roads and other infrastructure related areas, and which is why he's decided that they will miss the fiscal deficit target of 3.6%. It's now pegged at 3.9%. But do you believe that this is enough to give that private investment cycle a push as well?
I think the finance minister mentioned 70,000 crores as the additional amount he's giving. That's one. Second, that shows the kind of person you are. He said, but this is by no means enough. People don't say that. The finance minister don't say that when they make an allocation. So obviously nothing is enough. We missed out last 10 years. Definitely last 5 years. And because of that, it will take time. That's what I said in the very beginning. That I myself say it's as good a budget as could have been, but that doesn't solve all the problems of India.
No, it doesn't solve the problems, but at least it moves us in the right direction.
And I think it was recognized for the last few months that private investment is not coming in.
It's not picking up,
And the government has itself said it will take time to come, and that's why the public investment is required. The word used very rightly, even in the economic survey, is to crowd in.
Absolutely.
Normally when you borrow a lot in the government, you are crowding out private sector. You have to crowd in
the private sector.
That will take time, both domestic and foreign. But keeping that in mind, I think exactly that the 70,000 crore additional amount, which he himself said is not enough, I think that's the maximum he could have done. As you said, he'll now come to 3% 3 years down the line. Instead of 3.6, he's gone to 3.9 for next year.
They've chosen the path of boosting public investment at this point in time over fiscal consolidation.
I won't say that. I was for fiscal consolidation
in the short term.
And that's hardly anything. 3.9 from 4.1 is pretty good.
And it was expected.
There's no magic to 3.6.
Sure, but Kiran, fiscal deficit at the end of the day is a number, and the government has maintained or clarified its position as far as the medium-term framework is concerned. But we were talking about entrepreneurship, small and medium businesses, R&D, innovation, and he has delivered at least some sort of incentives on that front.
First and foremost, I think he's walked the talk. I think it is a budget that is not just directional anymore, but he is focusing on being destinational. So I think they are focusing on how are they going to deliver. So we are seeing some very positive statements of how they want to do it, and I think that's very positive. I'm normally very critical of all budgets, and this time around I would say that they have met a large number of expectations.
What, 70%, 80%, 50%?
Well, the point is, we have not yet seen the fine print, so I don't think it's about rating it in that sense, but I would rate the budget pretty high because they have basically touched upon all the various challenging areas.
So what would the highlight be as far as you're concerned?
So one big highlight for me is the fact that they recognize the need for a bankruptcy law. I think that's a very important and welcome announcement that he made. The second thing was, of course, the outlay that they have made in terms of, infrastructure. I think the long-term capital that is required for manufacturing and things like that was very important. Simplifying regulations. I think that was the single messaging I got from this budget, saying that they're going to simplify a lot of these very cumbersome rules and regulations, which includes also the exemptions. So removing ambiguity, simplifying regulations,
and
of course I'm very, very happy about the impetus given to startups and entrepreneurship
to innovate in India.
But I still need to see what they're going to do there. Because I still haven't seen
another 1,000 crore rupees under the state law or whatever.
The 1,000 crore fund is not an innovative new thought process. But I would have liked to have seen tax exemptions of people investing in the innovation space. Like angel investors.
I think he has made some, I'm not sure, I don't remember exactly, but I think there has been something on those lines that has been provided for, but we need to see the fine print.
We need to see the fine print.
Rajiv, on the tax front, retrospective taxes, I'm not sure whether the annexure or the details have any more clarity, but reiteration of what he said last time around.
Section 9 is a good thing, which we talked about, indirect tax transfers. That was a big issue. So I think there is some clarity that he's providing on around Section 9, around indirect tax transfers.
Hiking the threshold for transfer pricing from to about 20 crores?
That's also good. It'll take a lot of people out of that. I think the two things which are good, one is this AIF. removing
the pass-through.
the pass-through there. That is good. The second is allowing foreign investment there. That is good. So you can have a Indian AIF with, so people can raise domestic.
And doing away with the distinction of FPI and FDI.
That's what I'm saying. Well, that one has to understand, because that could mean that, for example, in any listed company, hypothetically, if you're looking at the real estate sector, if FI is allowed in a listed company, so
you will reach your limits then.
Yeah, then does it mean that even in a private company you can get FDI, or does it mean that you can't get FI in a listed company? So I don't know. So one has to understand.
Okay.
But it was a long sought after demand, because it was just creating unnecessary complexity. So I think if actually it means more FDI, then I think it's good.
Okay, so wrap up comments. How would you rate the budget and your big highlight?
No, I think it's a very positive budget. I think it's very inclusive, because he's talked a lot about the common man, where he said in every village we want to get medical facilities, we want to get roads, we want to get houses, everyone to have a roof over their head. On people's side, I think on the industry side, what I really like positive was that he has reiterated GST once again, that 1st April 16 it will move ahead. I don't want to give a number, Shereen, but I'm going to say it's very positive, because one has not seen the fine print. So one doesn't know, but it's very positive.
Rajiv Memani, very positive?
Very positive. I think if you were to see, whatever he has given in taxes, he didn't have too much of fiscal maneuverability. But if you were to ask industry, what were the 5 issues, key contentious issues that industry
would like to address?
I think he has addressed that, and specifically any issue that didn't entail massive tax outgo or loss in tax revenues. I think he's addressed that. I also, outside of tax, I also think what he has done on the pension and is very good.
To make India a pensioned country, as he said, that
is very important, and I think that is a very, very positive thing that he has done.
Kiran?
I echo everyone's sentiments. I think it's been a very good budget, well thought out budget, and I think it's a very good positive budget.
Okay, Mr. Bajaj, I'm going to give you the final word, sir. You started by saying that it's as close to a dream budget, or as close to Mr. Chidambaram's 1996 budget. Would you like to end there as well?
Might as well end by doing what the other 3 friends of mine did not do, and I'll give it 9 out of 10.
9 out of 10, all right. It's always a pleasure speaking with you.
I've never done that in the last 10 years for any budget.
You've done it now. You've done it now. 9 out of 10 coming in there for Rahul Bajaj. Thank you very much for joining us here at the CII. Thanks so much.